right. Welcome back to another edition of the Kansas City Market Pulse, sponsored by Midwest Commercial Real Estate Advisors. We got another deal spotlight edition today. We've been very busy in regards to getting real estate deals going and transactions and listings. And so one of the things that we're going to do on a regular basis is not only cover market reports and have great guests on, but similar to what we did last week, we're going to be showcasing those types of opportunities for you here live, here on LinkedIn and on YouTube, so that you can really hear from us, the brokers who are representing the owners and the property owners, to really understand what's the opportunity here and to ask questions live to us, which is very exciting. We've been also working very diligently on getting our market reports out. So if you aren't following myself or Nathan on LinkedIn or Midwest Commercial Real Estate Advisors, make sure you find us on LinkedIn, because we've been putting out really fantastic data, proprietary information that we are putting together in newsletter formats, as well as PDFs that you can download and you can go view, trying to help you to remember the future, right? What's going on? Where are cap rates at? What kind of deals are transacting? Where's financing at? All of these different components that are integral for you to getting your real estate deals across the finish line. So we're very excited about that as well. Today, though, we've got Nathan Roberts here. Nathan, how you doing?
Doing pretty good. How's everyone out there? How you doing, Logan?
I'm doing great, man. We're doing great. So excited to dive into a deal that we really kind of launched last year at probably one of the worst times, just in regards to taking a deal out for market. It's right before Thanksgiving. Then we have Christmas. Everybody's talking about interest rates and what's going on, and we have an election going on. So I think the project, even though it has a lot of really interesting characteristics to it, sort of kind of fell to the wayside. So we've relaunched this project with a price drop as well. So it's north of an 8% cap rate on a single tenant industrial deal here in the Kansas City metro area. What we would like to do today is give you guys an idea and an overview of the project, and then we're going to open it up for any questions that you may have on the project as well. And thank you for everyone who got those questions over to us beforehand. I've got those listed out as well, and we'll make sure that we get through those as well. So Nathan, if you want to, we can go ahead and dive in if you want to get your screen shared.
Okay, let me get that pulled up.
Generally speaking, I'd say that industrial in the Kansas City metro area has been holding up very well. If you look at a bunch of different national market reports, you'll see that, yes, we have a lot of construction in the pipeline, getting constructed right now. But you have to really dive a little bit deeper into that information, because, about 60, 70, maybe even close to 80% of those real estate deals are tenant and tow developments, not spec developments, right? And so we don't have that much spec coming online. Additionally, where I think that Nathan and I are continuing to see an increased demand and not very much supply is small bay industrial and shorter and smaller size of unit sizes. I mean, we are working on 3, 4, maybe even 5 different kind of either contractor garages or flex space opportunities that we're excited to bring to the market here recently. But there's a big demand for that. Why? Well, there's a couple different things. I think that one of them being like, look, there's been a big push to get onshoring back here or nearshoring back to the United States, so people can really control those supply chains. And then we have to talk about, tariffs, right? I mean, tariffs are on the front and center of everybody's mind. And I think people are starting to understand how that may impact. I've seen some prognostications out there with some respected economists saying like, look, it's a pretty good sized tax, but it is a one-time tax, right? It's a one-time real big hit to a lot of these companies. And Dr. Peter Lindemann was just talking about that on the Walker webcast. So his words, not mine. So companies are starting to really start to think about like, hey, how are we going to manage our warehousing? How are we going to operate our businesses? What are we going to do for our manufacturing? And I think that's really important for folks to be thinking about, which continues to have impacts on the demand side. Where we have not been developing in the industrial spaces, spaces under 50,000 square feet. The vacancy rate is holding somewhere between 3 and 3.5% for that type of product type. So that really just means that that's the time that it takes for somebody to move out and somebody else to move back in, right? I mean, there's no vacancy in those locations so as long as you are in a well-located area. And so, Nathan, are you ready to share your screen?
Yeah, I am sharing my screen now. Can you all see everything now at this point?
I'm getting us added to the stage right now, my friend. So we should be good to go. And we are seeing something. We're definitely seeing something.
Can you see this? The Broadmore Kennels OM?
We're not. We're seeing your
the Infinity. I see.
We are, yes. All right, just hang with us while we get this figured out. We probably should do some test runs. I'm always in here trying to click around, trying to figure out the technology. But, Nathan, you being a young guy, I figured you'd have this, figured out, right? All right, I think that's the right screen now.
Okay, perfect.
Let me get this added to our stage here. Now we are seeing the offering memorandum.
Perfect. So this is to describe this property, it's a light industrial flex property sitting on about 5.43 acres in, it's somewhat central Shawnee, but the address is 20560 West 47th Street. Broadmore Pet Retreat is the tenant that's occupying two of these buildings. So on the 5.4 or 5.37 acres, there are two different buildings. So this building is roughly about 3,000 square feet. And then we also have another one that sits on the edge of this parcel that is 5,000 square feet. But let me go to an aerial shot. So this is the 3,000 square foot building right down here in the corner. That is the 5,000 square foot building. This is sitting on about 5.37 acres. And then you also have two sheds as well. But to go a little bit about the details of the property, we are asking $1.2 million for this property. That comes to about $145 a square foot. Right now, the tenant is in a 10-year lease they're currently in their second year of a 10-year lease with annual 2% rent bumps. This is a industrial gross lease, so the tenant is responsible for the base rent plus pretty much everything on the interior of the space. They're responsible for the asphalt and then also the property taxes. So as far as any sort of CapEx or capital expenditure items for the ownership perspective, really that would only come down to the roof, which is new. That got replaced in August of last year. And then things dealing with HVAC. So any sort of HVAC repairs or replacements that are over $500 a month, there is a cap that the tenant has. So the two sheds.
Hey, on the tenant, just talk a little bit about General Atlantic, because I know they have quite a few locations across the country, right? I think the strength of this business is something we need to spend some time on.
Yeah. So General Atlantic, they own about 20 different locations for pet clinics. So they're a well-experienced operator. They've been doing this for years. Just the fact that this tenant was acquired by General Atlantic is definitely a benefit. As far as the likelihood or any sort of associated risk with this tenant failing, that's pretty much non-existent for this property here.
Okay, great.
But these are just some drone shots of the parcel of land. So as soon as you come in, you're right in front of that 3,000 square foot building. And as far as some of the improvements that will be made prior to closing, the ownership or the seller of the property, they're going to be going through and they're going to be asphalting all of this. Let me show a aerial shot. They're going to be asphalting all of this gravel. Any of the HVAC systems that are older than 7 years, they're going to be replacing those. And then right here, you can barely see, but there is a small little ravine here. He's going to be building a bridge that goes over this ravine. So this is just where, the access water for the parcel pretty much goes down into this creek area. He's going to be building, pretty much has to tear down a lot of these trees and build a bridge over this ravine here. So as far as the value add play here, obviously with anyone that's coming in, majority of the investors out there are looking for value add. They're not necessarily looking for a core plus deal unless it is a very sizable transaction. This is I mean, it's only about 8,300 square feet. But the value add play here would be the industrial outdoor storage use. Just knowing that this is on 5.37 acres, you could pretty much gravel all this off or asphalt it, and then build up some fencing here so it can be secured. And then you also have the ploy of doing some ground up additional flex buildings here on this parcel as well. But a little bit about the area. This is in Central Shawnee. This property is located about 6 minutes west on 47th Street from K7 Highway. And if you all are following any of the developments that's happening from the KCK Speedway all the way down south, down K7 Highway over to DeSoto, Kansas, there's a lot of industrial that's being built. Majority of it's going to be large scale logistics and warehouse centers, but there are a few small flex industrial buildings that's being built as well. I mean, we're working with 2 developers right now in Bonner Springs that are building some ground up flex, one that's doing flex garage spaces. And then I've also seen quite a few proposals out there for properties flex that's in that 16,000 up to about 25,000 square foot range. But looking at this aerial map, this is where we're located on the map. And then this is K7 Highway. So we're literally a 6-minute drive from here. I know in this area here, there's a couple flex developments that have been proposed, but pretty much every development along K7 Highway is pretty much large scale logistics centers. But as far as the financials, as I mentioned, as far as CapEx items, there's not really much that you have to worry about there. Most of the capital expenditure items like the roof, HVAC, they're going to be new prior to closing. But as far as the taxes are a pass-through charge, as I mentioned. So really the only expense from the ownership perspective will be with property insurance and then certain repairs and maintenance that are on the exterior of the building. Anything on the interior, that would be the tenant's responsibility. But right now, we're sitting at a NOI of about $98,000. Assuming that 2% annual increases to that base rent, I mean, we can be sitting at $104,000 in the next few years. And we also are being somewhat conservative with these numbers when it comes to any sort of increases to the operating expenses. So we are assuming, I think, roughly about 3 to 4% increases each year to the expenses. So for this to be sitting around $104,000 without any sort of value add, that's definitely a great thing, because as a value add player coming in, they want to try to lower that associated risk as much as they can. Number one, it's going to be lowered with this tenant that is backed by an equity group. And on top of that, you're going to have the steady cash flow while you focus on some sort of value add dealing with all of the land that's on the parcel.
Hey, Nathan, we do have a question that I think is pretty, applicable to what you're talking about right now. Are there any built-in rent escalations or any percentage rent clauses in the lease?
Yeah. So there's no percentage rent clauses. There are, we do have some rent increases that are baked into the base rent. So starting June 1st of every annual year up until the end of that lease term, there are 2% annual increases or bumps to that base rent.
Okay. Excellent. And, we talked a little bit about the local demographics, but like just from a village pet care standpoint, Broadmore Kennels, right? Like, let's break down who the primary customer base is supporting this pet retreat, because we've had a lot of conversations with the ownership group. How long has the pet retreat been here grooming and boarding? And is there any risk of that, customer base leaving or anything like that?
Yeah. So, I mean, with any sort of pet clinic, it's definitely location based. So I believe they've been around for about 8 to 12 or 8 to 10 years at this point. And with any sort of pet clinic, I mean, customers, they don't really like to travel far distances to drop off their pets. I mean, really, it's going to be the local residents or pretty much the local residents that are residing in this area. Those are the ones that's utilizing this service. If this tenant were to up and move, really, there's no other pet clinics around here, which means they would have to travel pretty much south into downtown Shawnee in order to get any sort of more, I guess, another facility for their pet when it comes to boarding or grooming. Excellent. But looking at this on a map, I mean, this sits pretty much on 47th Highway or 47th Street, there are some industrial warehouses along this corridor, but for the most part, this is a lot of um, residential subdivisions around here. Once you go further west onto K7 Highway, that's when you start getting into more of the larger scale industrial. But this area in particular, it's surrounded by a lot of residential properties, and those tend to be the user base for this tenant.
Okay, excellent. Yeah, absolutely. Any ideas on just like the traffic count and visibility at this location?
Yeah, so the traffic count, I don't have that number off the top of my head. I can definitely get that figure over to you all. But 47th Street is a corridor that is heavily trafficked, especially for anyone that's coming off K7 Highway that lives in this area, or someone that's just passing through this area to get the 435 from K7.
Got it. Excellent. All right. We got a couple more questions now. I mean, but I want to let you, continue your presentation if you've got some more information on it.
Yeah. So as far as the market overview, I've somewhat already talked about Shawnee in what this city offers.
Ooh, let's stop right here. This is great, right? I mean, 67,000 people, right? I mean, that's a huge population, right? Is this a 1 mile radius here?
This is within a 3 mile radius.
Huh.
Yeah. So a lot of the times with the or it's within a 5 mile radius. Sorry. So within 5 miles in Shawnee, there are about 68,000 people for the population, 25,000 for the household. And look at this number here. It's 100,000. I would say average for Kansas City tends to be around 65 to about 70,000. So this is about 30,000 higher than the average in the area. The median age is about 37.9. That doesn't really change much for the demographics outside of like these are working class people. So that's a positive thing for this area in some of the tenant bases that would essentially be using this pet clinic for their animals.
Absolutely. I mean, that being $25,000 above the median United States average, I think is a great marker for people who are looking at this type of investment, right? I mean, if you have some disposable income, you may have pets, right? And you might be able to board those pets and get those pets groomed, and you're actually taking them somewhere to do that. So here's a good question. Why is the owner selling now? And, what do you think that the type of buyer profile that is, the right buyer for this?
Yeah, so those are two great questions. The owner is selling because he's getting towards retirement. So he has owned and operated this business for the first initial 8 years. He ended up selling to a private equity group in 2021. So at this point, he's just getting ready to retire. There's not much that he's wanting to do with the property. Obviously, the operational side with the business that has already been sold off. Now it's time to sell off the building. As far as who would be the end buyer for this, it would really be some sort of value add player. That's really the individuals out there, the investors that are actually acquiring properties. Not only are they looking for something that's stabilized or a little bit lower associated risk, but they also want to have a value add component here. So for anyone that's looking for even just a stabilized deal, if you want just stable cash flow, you don't want any sort of high level of associated risk, this would be a great investment property for you. If you're someone that wants to come in and do some value add, if you have the if you want to do some sort of ground up or some sort of industrial outdoor storage use, this would be perfect for you as well, because that's really where a lot of the upside would be with this property, with some of that ground up or industrial outdoor storage use.
Yeah, absolutely. What is the financing landscape for this asset? Are local and regional banks comfortable lending on this kind of property?
Yeah. I would say definitely local and regional banks. If you go with the National Bank, U.S. Bank, Great American Bank, one of those associated entities, they tend to prefer those larger assets. But with a community bank or something that is regional, this is right up their wheelhouse. I would say as far as the lending, when we're looking at interest rates, you're probably going to be in that 6.4 to about 6.85 range. And it really depends on it's going to be depend on the credit of the borrower and a few things associated with essentially, if you can have some of a lot of the community banks tend to want to have some of your collateral or your cash being held at their bank. So that is one thing to keep in mind. But as far as the interest rates for this property, you're going to be in that 6.4 to 6.85 range. And then loan to value, majority of them are probably going to want to stay around that 30 to 40% for that down payment. So loan to value, you're going to be in that 70% range.
Right on. Yeah, absolutely. I think that's a really good overview of the project. As I'm thinking about this, there's a lot of people that are looking to kind of break into this industrial space. Well, this is a great opportunity, we think, for you to be able to, one, have stable income, right? We're looking at a debt service coverage ratio of about 1.55, a current cap rate around 8%, give or take, right? Cash on cash return is going to be pretty high, just depending on how much leverage you put on it and what rate you can actually get. But you have opportunity to have some yield and then figure out how to utilize the rest of your acreage, to the best of your ability. One thing that I hope that we'll be able to do, Nathan, please get the drone video set up for us so we can watch that. But on the backside of the second building, which we didn't spend, you saw a photo of it. There's actually a dog park back there, which is a very sticky amenity for this property because there's not any other properties around where you're going to have the ability to actually have a dog park. So when somebody drops their animal off, not only do you can get it groomed, you can get it boarded, they're going to have a dog park that is there and they can be outside and move their legs and get their exercise, which I think is great for the dogs. However, if you're looking at this from a development or value add potential, that is land that is available for you to figure out how to generate income on. One of the questions that came through, I think that we need to ask is, if the tenant were to ever leave, right? What do you think the re-tenanting prospects are? And could this space be easily converted to another type of use? I think that's a fantastic question. Thank you for sending that in.
No, that is an excellent question. I would say as far as the ease of re-tenanting this property with the current use, that would be pretty easy just because there's very little competition for pet clinics in this area. As far as changing the use in having some sort of, let's just say, a gym or some sort of brick and mortar in this building here, that would be pretty easy too. Right now, it is pretty much shell space for the most part. As soon as you walk in, you have your office, and then the rest is pretty much open warehouse or open warehouse flex space. You could essentially build whatever you want. If you wanted to expand it out and have some sort of mostly office use, it would be great for a contractor because there's so much land out there for you to store your equipment. And then also on the interior, that can be office. It can be more consumer facing, like some sort of retail showroom. The great thing about Flex is it offers a wide variety of different use case scenarios for any tenant that would be interested in this property here.
Absolutely. And if you want to talk more about the value add opportunities, Nathan and I can work with any buyer group that's interested in this property on actually getting that space ready for industrial outdoor storage. We can run the comps and let you know what you might be able to actually rent that space out. And very quickly, within the first couple months of acquisition, you might be able to be generating more income on this property. And we would be happy to work with you in regards to getting that leased up. Now, Nathan, I see that you've got your video set up here, which I think is fantastic. I did drop into the comments. If you want to learn more about the property, please head over to Crexy in this link that we have sent here. It's on Crexy. You'll find it on LoopNet. You can also reach out to Nathan or myself or anyone on the team for more information on the property. But I think that what we'd like to do now is just kind of showcase the drone video and a walkthrough of what Nathan did when he was on site. So go ahead, Nathan.
Are you an investor looking for your next deal? Look no further than this property here at 20560 West 47th Street in Shawnee, Kansas. We're located near a few key developments like the Panasonic battery plant and the Mattel Adventure Park. The seller has went through to update the building with new roofs and HVACs. He's also planning to asphalt a new driveway and install a bridge over the ravine. The tenant is in their second year of a 10-year term while being financially backed by General Atlantic, who owns 25 plus locations. You'll also have a stable source of income with annual 2% rent bumps every July. Reach out to the number below on the screen for more information about this investment opportunity.
Fantastic. That brought up a really good question. Nathan, when are those improvements going to be completed in regards to the asphalting of the driveway and the bridge being put in?
Yeah, so those improvements will be made prior to closing. So once we do get the property under contract, that's when an ownership group is going to spend that money in order to asphalt that gravel, and then pretty much has to remove some of those trees over that ravine, and then they're going to put that bridge there.
Okay. But just to recap, guys, I mean, there's the opportunity for stable yield here in an industrial asset class. You have the opportunity for industrial outdoor storage or additional buildings to be built on the site. Not to mention, you have a dog park with land, with future development opportunities and income potential, but also the seller is willing to come in and spend money on the property to improve the property for you. So in regards to infrastructure costs and anything like that, there's going to be asphalting of the road. There's going to be all of this work done to this bridge and to this ravine so that you have the ability to segment off this property and get it leased up and utilize the acreage that is already there. In a growing location of Shawnee, Kansas, Johnson County is a coveted submarket that many people are always looking to get into. I think it's a perfect opportunity if you are selling an investment property or a rental property in a different state and looking for a 1031 exchange. This is something that you can set and forget, or you can come in and you can work with Nathan and myself, and we can add the value and help you add the value. We've got contractors. We can get it leased up. We can help you think through the best way to structure what that might look like, and even run some residual land value analysis in regards to if you should build any more buildings. Nathan, I think we've got through most of the questions. We try to keep our deal spotlights right around that 30-minute mark, which I failed on last week, but we are about to hit it this week. But what should somebody take away here, and what is maybe something that we haven't talked about?
Yeah, I would say the biggest takeaway here is that this property is definitely on the path of development. I mean, anything along K7 Highway, just knowing that this is just 6 minutes east of that, that's definitely a great play for an investor coming in. I mean, number one thing is if you're looking for a stabilized deal, this would be perfect for that. Even if you're a value add player, you definitely want to lower some of that associated risk. And number one, you could have stabilized income as you're starting to build any sort of ground up or that industrial outdoor storage use. So I would say for an investor coming in, there's definitely a few value add plays that can be had here, or you just want something that's stabilized and there's not much work that needs to be done to it on the CapEx side.
Absolutely. Well, Kansas City is heating up. We just landed on another list of one of the most affordable markets in the United States. There is so much going on in the city. There's cranes everywhere. There's residential development going. National builders are coming back into Kansas City in a big way, and those are building these subdivisions and these houses. And we always like to say, where rooftops go and grow, commerce flows. And so positioning yourself in the path of progress, which Shawnee absolutely is going to be a good long-term investment play. Pair that with stabilized yield as well as a value add opportunity, and you may just have your next investment property. Thank you all for joining us for this short edition of the Kansas City Market Pulse. And we're hosted by Midwest Commercial Real Estate Advisors. We're a full-service commercial real estate brokerage. If you have any needs in regards to leasing, buying, or selling your properties, we are working on a lot of transactions right now, ranging all the way from land to industrial to retail to multifamily and even some office buildings. So we're very excited about the continued growth. If you have questions around the Kansas City market, again, we have put out some really great resources here recently. We have an industrial submarket or market overview, as well as focus on small bay industrial. So if you'd like to have that, reach out to Nathan and myself. We'll send you the PDF of that report. You can find that on LinkedIn, and it will be on our website here very soon. Additionally, if you're just interested in general commercial real estate trends, make sure to check out our newsletter and our market reports on that. And today we dropped the 5 main key takeaways that somebody needs to be watching if you're looking to make an investment into commercial real estate. And that was instigated and really inspired by Dr. Peter Lindemann's episode with Willie Walker and Dunlap, and that went live today as well. So our goal here with the Kansas City Commercial Real Estate Market Pulse is not only to bring you the most up-to-date insights of the Kansas City commercial real estate market, but also bringing you guests on as well as deal spotlights like this. And we want to be the centralized hub for you to get the best information that you need to be able to make informed investment decisions. I think we'll be back next week again with an edition of the Kansas City Commercial Real Estate Market Pulse, probably going through all of the Q1 transactions and trends that have happened in Kansas City, but also on a national level. And we likely will do an industrial asset class spotlight just in general here in the near future as well. Again, we have dropped in the link to the comments for this building. You can find this on Crexy. You can find this on LoopNet. You can find this on LinkedIn. You can find this by emailing or calling myself or Nathan Roberts. We'd love to work with you guys and gals and be able to help you find your next investment property or work with you on any of your commercial real estate needs. Nathan, thanks for being here, and thank you all for tuning in for another episode of Kansas City Commercial Real Estate Market Pulse. We'll see you soon.